Hi, it's Andy Hoffman, Media Director of Miles Franklin Precious Metals, which this week will be launching its 25th anniversary celebration. So look forward to articles and promotions and a whole lot of other things in the coming weeks. Okay, so I have 3 pages of notes, which simply means there's that much bad things to talk about. Believe me, I have better things to do. But there's a lot of bad things going on. So let's start with the economic data. Starting in Europe, where January bank lending data remained at its all-time lowest level. That was just published earlier in the week. French unemployment came out yesterday, a new all-time high, up 30 of the last 32 months. And it looks like Italy, which now has had its second government collapse in the past 5 months, may actually be seeing the bankruptcy filing of Rome, perhaps within days or weeks. As we wrote in a piece earlier this week called Draghi's Reckoning Day, clearly the ECB is going to have to take the extraordinary measures it's been talking about soon, perhaps as early as this Thursday's ECB meeting, when perhaps they'll take their interest rate down to zero. They may even discuss negative deposit rates or even the institution of the OMT, or the outright monetary transaction plan, which is really a form of QE. They reported comically this morning 0.8% annual inflation in Europe, which is exactly what he needs, Draghi, to get going with the money printing. And if you think that inflation is just 0.8% in Europe, then I guess $10 per gallon gasoline doesn't count as inflationary. Here in the States, as Janet Yellen finished her testimony in the Senate on Thursday, which I'll talk about in a second. First, we had Monday, where the Chicago Fed Manufacturing Index plunged from 0.2 in December to negative 0.4 in January. The PMI Service Index went from 56.6 to 52.7. The Dallas Fed Manufacturing Index plus 3.8 to plus 0.3. That's just Monday. Tuesday, the Case-Shiller Index of real estate, which typically is a major lagging indicator. It takes a long time, like the Titanic or a large cruise ship to turn around, has now shown its second straight monthly decline for the key 20 city index. So clearly, even the last indicator of housing is starting to roll over. Consumer confidence also fell from 80.7 to 78.1. The Richmond Fed Manufacturing Index plus 12 in December to minus 6 in January. And that was just Tuesday. Wednesday, the MBA, or Mortgage Bankers Association Composite Mortgage Index down 4% last week and then 8.5% this week to a new 19-year low. The MBA's Home Purchasing Index down 6% last week and then 4% this week. And their refinance index 3% last week, 11% this week. Thursday, jobless claims unexpectedly surged to the highest level of the year. And as piece by piece, the propaganda of the weather-related economic weakness is refuted. Durable goods orders down 1% in January. December's number revised from a 4.5% decline to 5.5%. And the best part of all, the seasonal adjustment that they made in January, which is always negative, somehow they made it positive this month. So clearly that number should have been worse. And then, of course, today, Friday, fourth quarter GDP, which was hyped as so amazing, even though the accounting's ridiculous to start with, was reduced from 3.2% growth to 2.4% growth. And of course, I'd be remiss to omit the major, quote, good news this week, which was Wednesday's surge in January new home sales, which makes absolutely zero sense given all other housing metrics, what they're saying, such as the ones I just noted. But then again, we're looking at seasonal adjustments, and since January is typically the lowest month of sales, those seasonal adjustments can do the most good in manipulating. As it turns out, as I was reading on Zero Hedge, the U.S. government rounds up everything. Everything they do with seasonal adjustments related to housing is rounded up, never rounded down. And of course, who believes any of these numbers anyway? Well, anyway, remember Janet Yellen's now been in office for a whopping month, a month of recovery in which every week I've been reporting on this, on the collapse of economic data around the world. She completed her testimony to the Senate. Remember, it was delayed because of snow a few weeks ago. And she actually changed what she said a couple of weeks ago to the House, because now she's talking about how they are in fact data dependent and they would reconsider the pace of tapering if the economic situation changes, which of course it has. And she also said they're always looking for bubbles, but they don't see one now. Her comments said that she sees softness in the economy, but she's not sure how influenced by the weather it is. And it's amazing, really, how this weather propaganda continues. We wrote a piece last week called Mother Nature's Had Enough, which squarely refuted it, and just piece after piece, such as today's, there was some housing data out, again, showing how in January, the best activity in the nation was in the areas that supposedly had the worst weather. So again, this is the new red herring, this bad weather thing, because they need some way to explain how the recovery is not really a recovery. My favorite of all these refutations is retail sales. In January, they were reported to be down 0.4%. In the United States, and my God, all the propaganda out there in Wall Street and Washington talking about how it was the weather. But if you look at that number, actually in-store traffic was flat in January, but it was online sales that were down 0.6%. So the majority of the drop in sales was for people who were sitting in their warm homes. And boy, I can't wait to see this coming Friday's NFP report. I mean, remember, 1.3 million people left the long-term unemployment benefit payrolls in late December and yet have still not showed up as unemployed. They have not been taken out of the labor force yet in December or January. Of course, if they do, the quote unemployment rate will fall at 6.6% now, probably to 6% or below. And that really makes the Fed look stupid, since they had that initial 6.5% threshold to end zero interest rate policy, which they've since gotten rid of. But eventually they have to do that. And then keep in mind there are another 3.5 million people whose long-term unemployment benefits will expire throughout this year. Are they all going to get jobs in this economy? Especially when almost every new job in the economy is given to someone who's over 55 years old, and it's typically a low-paying job? Probably not. So who knows what the labor participation rate will actually be at year end. Anyway, a couple of things, a couple of topics this week. I started by writing an article called Countdown to Collapse on Monday. It was pretty amazing when I looked at Zero Hedge and other sources over the weekend, and I saw that there were 4 separate coups, or actually 3 separate coups going on at once in the world, in Ukraine, potentially Venezuela, it's right at the verge of it, and the Congo, and now Turkey, where they're driving the president out, and the currency's hitting a new all-time low. I mean, these are countries in the 4 corners of the earth, different continents. So we're talking about the exported inflation of the Fed is being seen everywhere, the Fed and the other Western money printers. In the U.S., we have no inflation according to the Fed, but we have record meat, milk, and chicken prices. And now with this drought in California, not to mention the one in Brazil, the potential for record fruit and vegetable price explosion in the coming months. And don't forget, gasoline prices for the last 3 months, December, January, and February, have been their highest level ever at this time of year. So what are they going to look like when you have the highest driving season levels this summer? And don't forget what Obamacare is doing. I see that Obamacare is now showing up on all restaurant bills as an extra tax. Major inflation, but again, that doesn't count. And I won't really go too deep into Ukraine, but I see the Russian ruble sitting near its all-time low right now. And you see Obama and Putin that are openly feuding about this. It's the kind of thing that could become a major black swan or gray swan pretty quickly. Then there's a story, which of course the press isn't talking about. I wrote about it today or yesterday in a piece called Chinese Financial Torture. Remember, the Chinese yuan has been pegged to the dollar for the past 20 years. This is the biggest source of global inflation there is because the Chinese print dollar for dollar with the Fed or yuan for dollar to keep the value lower. It's also why a lot of the jobs that would have left anyway have left the West, such as the US, permanently. But this week, all of a sudden, clearly the PBOC, the People's Bank of China, has been intervening. The yuan is plunged. I mean, we're talking down 1.5% in 1 week for something that's pegged. That's the largest weekly the largest weekly decline really since they've done the peg. And not only is this a major, if this continues, and there are some major financial meetings going on within the Chinese government next week about the economy. If this continues, it'll have catastrophic impact on the global economy. And not to mention, there are 500 billion of derivatives that are pegged to this rate. Most of them betting that the peg will hold, and that we're right at the cusp of where those derivatives start to blow up on the banks. So keep that in mind. That we're now up to 6.15 yuan per dollar, and if that rate goes any higher, it could be a major financial issue for the world. Of course, now we go on to Bitcoin, where Mt. Gox, the largest Bitcoin exchange, completed its collapse by shutting down and declaring bankruptcy. There were hundreds of thousands of Bitcoins lost due to hackers. And comically, the other Bitcoin companies got together and said, "Oh, it's really just them. It's don't worry about it." By the way, the two leading exchanges, now that Mt. Gox is gone, are headquartered in Bulgaria and Slovenia. So if anyone is going to trust putting their money or their Bitcoins in those things, good luck to you. And again, I've talked about Bitcoin in the past. I'm not saying the concept is not something that doesn't have a possibility down the road as a means of off the grid payment. But until we get there, governments are going to fight it tooth and nail. So are the hackers. And as far as the quote investment merits of simply holding speculative digital coins, that's another story entirely. They do not have intrinsic value, no matter what anyone says about them. And yes, they could go up in value, but they are still speculative investments. They are not, as I wrote in an article a week or two ago called "Store of Value." They are not going to, they're not going to preserve your net worth over generations. In fact, I wrote another piece a day or two ago called "The Definition of Value," because as it turns out, in California last week, a couple was just walking around their property and they found buried in some tin cans some gold coins from the mid 1800s. U.S. government minted gold coins like gold eagles, and they had $27,000 face value, worth over $10 million. So ask yourself 150 years from now what you think the value of a gold coin might be in terms of purchasing power, and then compare it to what you think an actual dollar will be worth. Laugh, laugh. Not to mention a Bitcoin. You think it'll be worth 50 times, 100 times as much? Will it be worth zero? I don't know, but I know I'm not taking the chance of putting my life savings into it. Onto the Comex. I'm so sick of Harvey Organ. I love the guy, but when he sends every day these updates saying here's what's standing for delivery, it's like at some point it's just a joke already. I mean, there's 630,000 ounces supposedly in registered inventory. The February contract, 400,000 or so standing for delivery, and another 100,000 that haven't been delivered yet from December and January. Why they haven't, I don't know. Obviously, the gold isn't there. But we have essentially no inventories, and yet the Comex still is able to, they're still able to smash gold, paper gold on it, and I mean, but it's getting to the point where the whole world knows this. I saw another article today by Bloomberg, another MSM, reporters talking about how gold may have been manipulated for the past decade at 10 a.m. Eastern Standard Time, which is when the physical market closes. So, the word is spreading. You're looking at today, we've been at this 1330 line in the sand, as I call it, for gold, because today is first notice day from the February contract. That's when people who had options to buy, this is when they would be telling the exchange, we want to take delivery. And, every single month, it doesn't even matter if the contract expires as it does Tuesday in the money, and actually it did close very nicely Tuesday, because what matters is the 3 ensuing days between the day when you are actually in the money and the day that you say, yeah, I would like physical delivery. And invariably, you get these hits. Wednesdays was the most ridiculous of all, where they took silver down 60 cents literally for absolutely no reason other than they don't want people to take physical delivery. But as I write here, Friday morning, in fact, we're just about at the Comex close. Both gold and silver are above their 200-day moving averages, well above in the case of gold, which I think is a very strong statement. Remember, record physical demand worldwide in January, especially in China. China was remember, 2013 was their largest ever demand for a year, and it was twice as much as the previous record, which was the year before. And now January is a much higher pace than what they were for last year. So keep that in mind for anyone who thinks that anytime gold goes down now, that it's because something has changed in the physical world. If anything, it's gotten stronger. And last thing I'm going to mention is again, our 25th anniversary campaign here at Miles Franklin is starting next week. So give us a call. We're going to do some promotions. And in particular, I mentioned this week how I sold some of my gold held at our Brinks facility and bought some of these Canadian Maple Leaf Peregrine Falcons. They do these limited edition series. They did a wildlife series, 6 coins over the last 3 years. I wrote an article about it. You can Google it. And all of them trade at significant premiums to silver maple leafs right now. So the fact that there are still, and they're only issuing 1 million of these Peregrine Falcons. I don't know how many are left, but it can't be that many. And we're selling them pretty close to the value of a generic maple leaf. So I think it's a pretty simple trade when you could buy something that has scarcity value at about the price of the generic. And especially in this case, when you're talking about a gold-silver ratio, which is so out of whack with every conceivable metric of what it should be. Well, I hope this was helpful. I hope everyone has a great weekend, and we'll talk again next week.